Today I'm going to talk about retail properties here in the state of Hawaii, touch a little bit about what's going on nationally. We're going to focus on retailers expanding and contracting retail investment properties, and start out with retail sales and occupancy levels in properties. And I wanted to give you, just right up front, something to take away, and that's one of our trade secrets at Colliers. It's a simple part. But what this shows is gross sales of retailers. And this is critically important and really, this tells the future. I don't need a mystic or a hat. Because by watching gross sales of retailers, you can predict where they're going to be able to pay rent and how your properties are going to perform. So the graph you see here is a national sales store graph. And for those in the back who may not be able to see the dates, but the time frame where the sales start dipping down, of course, is September of 08, and in the fourth quarter of 09, starting in September, sales go back to positive. So I think we all felt that. We saw that in a number of presentations here. But I think that might just save rental rates and keep occupancy pretty solid in properties here in Hawaii. And you'll see a recurring theme with that. So who's hot in the market and who's not? I think the biggest surprise, particularly in that last quarter, was luxury retailers. You look at year-end sales for Neiman Marcus and Nordstrom, and they were surprised. Some of the best sellers included electronics and shoes, and discount retailers we expected to do well. Who didn't do well? Probably a little more discretionary. This is teen money, typically coming from parent to child. And a lot of this is fashion and at a higher price point. So we've got a portfolio of shopping centers here in the state that we manage and lease, and we wanted to give you some statistics on what kind of happened with that. It's about 3.5 million square feet, so it's pretty representative. Sales in those centers were down at least 3%, and these are tenant sales. So if you add up all the sales for the tenants in a particular center, 3 to 28%. And when we looked at those, the further away you go from the core of Honolulu, the greater the drop. And so we heard some discussion earlier about neighbor islands being soft, and you'll see that play through in the vacancy rates. When we looked at landlord revenues, this was a surprise. So this is gross revenues collected by the landlords. They're actually up 0.9%. So you would think those would have gone down a little bit, but I think a lot of retailers dug deep. They tried to stay in business. They went into their savings, and hopefully that tick up at the end of the year is going to save most of them and keep them in business. Landlord expenses in our portfolio were down 1.3%. I think most of us up here last year talked about focusing on that. How can we minimize expenses to get through this year and drop it over the bottom line? Rental rates for properties. Surprisingly, they went up just a little bit. This is an average across the state for shopping centers, from just under $3.50 to about $3.55 a square foot. That was up 2%. So again, a little bit of surprise. It's part of the lag. We know sales dipped in the middle of the year. The question is that increase at the end, and what we think will happen in 2010 enough to keep those retailers going? So when you look at Honolulu compared to a number of West Coast cities, you see that we are extremely healthy. When you get to Portland, Seattle, Sacramento, it's definitely a tenant's market, not a landlord's market. I think if you also look at the red being 2008, the blue 2009, we notice that we had a very small increase where most markets did have a more dramatic increase. This looks at the state by island, and as we've discussed, the neighbor islands are definitely soft. And And we've seen areas on the Big Island, I say in the last 2 years, go from $4 or $5 rates down to $2 and $2.50 very quickly. So the prediction that Howard was looking for is what will the vacancy rates be for the end of 2010. We are predicting a little bit more vacancy, up to 4.5%. Retail sales in Hawaii, so these are collections of all things sold across the state. They were up in they were down in 2009 just a little bit. We're predicting that they grow